Welcome to our comprehensive USD/CAD analysis for the week of October 13th to 18th, 2025. In this presentation, we'll examine the technical and fundamental factors driving the USD/CAD currency pair, which has shown remarkable strength recently. We'll explore key support and resistance levels, analyze critical market events, assess short-term and long-term outlooks, and evaluate the risks that could impact future price movements. This analysis combines insights from leading Forex platforms, including TradingView, Investing Live, Action Forex, Forex.com, and Daily Forex, to provide you with a complete picture of the USD/CAD market dynamics. Let's dive into the details. USD/CAD demonstrated continued bullish momentum during the week of October 13th to 18th, reaching a high of 1.4078 before entering a consolidation phase. The pair traded within a range of approximately 150 pips, with support holding firm around the 1.3930 level. The weekly close settled near 1.3980 to 1.4000, reflecting modest gains and maintaining the overall uptrend. The trading range between 1.3930 and 1.4078 represents a healthy consolidation after the recent rally from 1.3538. This price action suggests market participants are digesting recent gains while positioning for the next directional move. The bullish trend remains intact as long as the critical 1.3930 support level holds. From a technical perspective, USD/CAD presents a compelling picture across multiple timeframes. In the short term, we maintain a neutral bias, expecting consolidation to continue. However, further upside remains likely, as long as the 1.3930 support level holds. A decisive break above 1.4078 would activate higher targets. The medium-term outlook suggests range trading as part of a larger corrective pattern, with the rise from 1.3538 representing the second leg of this movement. Looking at the long-term picture, the uptrend from the 2007 low remains firmly intact, supported by the 55-month exponential moving average at 1.3525. Moving averages signal bullish conditions, though momentum indicators show some overbought readings. Understanding critical price levels is essential for trading USD/CAD effectively. On the resistance side, the immediate barrier stands at 1.4078, the recent high and temporary top. Beyond this, we're watching 1.4250 as the next upside target, followed by 1.4312, which represents the 61.8% Fibonacci retracement level. The ultimate medium-term resistance sits at 1.4791, the 2024 high. For support, 1.3930 is the critical short-term level that must hold to maintain the bullish structure. Below this, 1.3725 provides key medium-term support, with 1.3538 marking the recent low. The most significant long-term support is the 55-month EMA at 1.3525, which defines the overall uptrend. The USD/CAD rally is supported by a powerful combination of fundamental factors. US dollar strength stems from the Federal Reserve's measured easing cycle, which maintains USD support relative to other currencies. Robust U.S. labor market data and economic resilience continue to underpin the greenback, while safe haven demand amid global uncertainty provides additional support. On the Canadian side, weakness persists due to disappointing economic data across various sectors. The Bank of Canada's policy stance creates an unfavorable divergence with the Fed, while commodity sensitivity, particularly to oil prices, continues to pressure the Canadian dollar. This alignment of technical and fundamental factors suggests the path of least resistance remains to the upside. Looking ahead, our base case scenario assigns a 60% probability to continued consolidation within the 1.3900 to 1.4100 range over the next 1 to 2 weeks. this healthy pullback would set the stage for the next leg higher. There's a 30% chance of a bullish breakout above 1.4078, which would trigger a rapid move toward 1.4250 to 1.4312. The bearish scenario, with only 10% probability, involves a break below 1.3930, leading to correction toward 1.3725 to 1.3800. Medium term, we expect range trading with an upside target of 1.4312. Long term, the uptrend remains intact with potential targets at 1.4500, 1.4791, and ultimately 1.5000, provided the 55-month EMA at 1.3525 continues to hold. Every trading opportunity carries risks that must be carefully evaluated. Upside risks supporting further USD/CAD gains include additional Canadian economic weakness, stronger than expected U.S. data, declining oil prices, technical breakout above 1.4078, risk-off market sentiment favoring the USD, and widening Fed-BOC policy divergence. Conversely, downside risks that could pressure the pair lower include unexpected Canadian economic recovery, rallying oil prices, weaker U.S. economic indicators, technical breakdown below 1.3930, improved global risk sentiment favoring CAD, and a more dovish Federal Reserve shift. Our probability assessment shows 60% chance of consolidation, 30% for breakout to higher levels, and 10% for correction. Proper risk management is essential regardless of scenario.